Maija Palmer from Global Corporate Venturing. So excited to have you here today. I'm always excited to talk with people from the GCV team, Jim Mawson and the rest of your colleagues, because you always seem to bring a global perspective, and you're incredibly well connected with sort of corporate investment trends. So thanks for making a little bit of time today.
Oh, well, I'm really pleased to be here. Thanks for having me.
So I'm leaving for Tokyo this weekend for your GCV Asia conference, and I know that a big part of what you guys have done is sort of running these events. Can you tell us a little bit about the event strategy? I mean, when I attended these 6-7 years ago for the first time, there was maybe 100 or 200 corporates. Now you're running 1,000-person events, so it's been quite exciting to see the growth. Can you talk a little bit about the event strategy?
Yeah, so this has been crazy. It's been crazy growth, and it reflects the fact that there are just so many more corporate venturing units out there, and they're everywhere. So I'd say that probably if you went back sort of 10 years, most of this activity was in the US, in Silicon Valley, and by very experienced VCs who had then kind of were helping corporates set up their units, and it was all very concentrated there. But in the subsequent, say, 10 years, we've seen it really kind of bloom everywhere. So there's a lot of this activity going on in Europe now. So that's why we just did an event in Munich where we had some of the sort of local German DACH region corporate, investment people coming over. It was a kind of 70, 80-person event. It was really interesting, but some really big company names there. Then we did an event in Brazil is going nuts at the moment in terms of the growth in VC. It's starting from a low base, but we're seeing sort of the numbers there of the number of corporate backed deals sort of doubling year on year. And then Japan is another place where we've seen in the past couple of years just a huge number of corporates sort of setting up investment units for the first time. So they're kind of new into it, but there's just a lot of them coming out. So that's why we've started doing, these kind of regional additional events. So they're smaller than the big flagship event, which still happens in Monterey. And the next one in Monterey is going to be in March, really looking forward to it. And then we've always had the symposium in London in June. And that's a little bit smaller than the Monterey event, but still quite big. But then these little regional meetups are kind of now starting to fill in. And I sometimes wonder whether, if we're talking in 5 years' time, how big is Brazil going to be then, right? It could be, do we get to a point where they're sort of rivaling the size of Monterey at some point?
Can you talk a little bit about your role at GCV and kind of what you're doing now, and how you sort of went from an entire career in journalism to a greater focus on sort of not only the financial sector but tech and corporate investing, and then what you do at GCV today?
Okay, yeah, there's quite a lot to unpack there, but I'll try to give you the short version. So I'm relatively new at GCV. I started in May. I came in as the new editor to take over from Jim Mawson, who had set this up, but he's really wanting to focus on lots of other things at the moment. So he wanted to hand over the editorial side to somebody. So and before that, I had had 20 years of being a journalist at the FT. The Financial Times, which was amazing. I mean, you could not get a better training in absolutely everything to do with financial journalism. I'd always focused there on technology. So I'd been a tech journalist for a long time, but I was really interested, particularly in kind of early stage startups. And so then that you don't really get an awful lot of opportunity to write about early stage startups for the FT, because they're really interested in stock market listed companies, right? And so there was a little bit of frustration there, because I kind of thought, well, this is an interesting, startups are a really interesting area. They're the kind of thing where you can really get an early read on lots of things that are going to happen if you can look at the, what's going on at that early stage. So I wanted to do a little bit more of that. So then there was an opportunity to go from the FT. The FT, I joined a group of journalists that sort of basically did a spin out from the FT called Sifted, which was focused on European early stage technology, which was exactly the area that I wanted to write about. And I had an absolute blast doing a startup. I would just say, if anybody, I loved it. I think everybody should do at least one startup in their life. It was intense, but it was an incredible ride. But then while I was at Sifted, I became more and more interested in the startup corporate relationship. So this became kind of my specialist niche within Sifted, because we were writing a lot about VC backed, like sort of financial VC backed companies, and they get a lot of publicity. And then, but what I sometimes felt like we weren't talking enough about some of the other routes that there are for startups. So not everybody gets a big check from Andreessen and then, becomes a unicorn and stuff. There are like a multiplicity of ways in which, as a startup, you can make your way in the world. And one of them might be a really good relationship with a corporate, and that might be corporate investment, but it might also be, an early commercial deal. Somebody's just willing to take a bet on you. So I thought that was a really interesting niche, and I began writing a bit more about it. And then, and then I sort of know Jim from FT days, and we had started talking, and at this point, Sifted had kind of reached what I would call cruising altitude. So it had kind of got out of the startup phase, and it was beginning to operate more like a normal company. And I sort of thought, well, now is a time for me maybe to go on to my next new challenge. And so, yeah, that's that. I jumped ship, and I'm really kind of enjoying the opportunity to kind of take an existing media organization, but to look at it, and bring some fresh ideas and see if I can shake it up and bring some new perspective to it.
Do you feel like being in London provides you with sort of unique global perspective? I'm quite fond of London, by the way. When I was 20 years old, my friend and I were enrolled in a university here in the US, and they took 300 students over for a semester abroad at the University of London. So we actually lived on the Queensway exit, right up the street from the British Museum and Hyde Park. And I'm so fond of being over there. It catalyzed a level of initiative and enthusiasm in me for business and the world. But what is it about London that sort of provides sort of a unique perspective on what's happening in the global ecosystem?
Yeah, I guess London is one of those places where, a lot of people come from all over the world. It does feel quite open. I don't know. And I do think that there is a kind of difference coming from a European perspective on this. I mean, not just London, but I just think, I'm gonna make all the the US people hate me now for saying this, but I'm an unashamed sort of Europeanist on this. And I think Europe has been behind in terms of sometimes getting onto, the really big VC bandwagon. But I think now that Europe started doing it, I think they do it slightly differently here, and they're kind of open to influences from everywhere. Whereas I think Silicon Valley, they're very good at it, but they're also a little bit insular. Like they're kind of feel like they know all the answers and they know how to do it. And it's kind of a relatively small group of people who all know each other really, really well, and they network amongst themselves. Whereas I think, again, when you are in London and you're kind of, you're often not just dealing with people in London, people are flying in from, Berlin to come and, work with you on a project, and you can nip down to Barcelona quite easily, or Lisbon or whatever. And I just think there's a sort of, a kind of a diversity of thought here about the way to do this, which I think is interesting. And I think, I would love to kind of mash that together a little bit more with the Silicon Valley thinking, and then see what we can create from that, sort of looking a little bit more broadly.
Well, GCV has certainly established itself as an industry leader with anything and everything that relates to corporate investing, and so your worldview, starting from London and expanding sort of the footprint, throughout the world, has been quite interesting. I can tell you from my experience, the Kauffman Fellows have a special interest group on corporates that includes about 70 corporates. I know that the National Venture Capital Association has a corporate venture group that I think now represents more than 100 different corporates, but there's no one that's playing the market leadership role like GCV is, with regard to mobilizing market insights on corporate investing and mobilizing corporate investors. And you're doing much more than just the events. Can you talk a little bit about, sort of what GCV is for people who are less familiar, beyond just the large scale events and sort of the power to mobilize, if you will? You're doing other things. Can you talk about that?
Yeah, so I mean, our intention really is to be the kind of everything store for corporate venture, right? So, kind of be, I think we call it sometimes the lighthouse. So so one part of it, I mean, it certainly started from the sort of just the market research point of view, just gathering sort of who's doing corporate venturing, what are they doing? That was Jim's idea back, 12 years ago when he really began this, was just, let's just look at who's doing it and then start to look at who's doing it well and then build from there. And now, so there's the events, but then also, we have the website where we can kind of keep that conversation going in between times. We talk a lot about some of the common, dilemmas and issues that people have, in corporate venturing, so that it's just a place where you can go and kind of, learn how to do your job better. And then in addition, one thing that I think is really interesting is the GCVI, so the GCV Institute, where we do this kind of professional development. So these are kind of 2-3 day courses that you can then go on to kind of learn particular skills in corporate venturing, run by an incredibly brilliant woman called Liz Arrington. You probably met Liz, but she's one of the smartest people I know. And I got to sit in on one of these courses when I first started, and it's incredible because you really get kind of this just things like do's and don'ts of term sheets, and some of them, there's different levels. So I went on one that was aimed at people who were fairly new in, quite young people who had just started on corporate venturing teams, and they were learning the basics of, some of the legal side, or, how to handle internal stakeholder management. And then there's other courses that are sort of for people who are a little bit more established, and now they're grappling with slightly more subtle issues about how to demonstrate value and how to build the best kind of business development team that you need, at a certain later stage in your journey. So the Institute is interesting. The events are interesting. And then, we have this kind of media presence, and which I think, all of these have the same principles in them, which are about bringing people together so that people can talk to their peers. And then it's about just the sort of professionalizing this industry. So it's not just a kind of ad hoc thing that, you do for a couple of years and anybody can kind of wander in and out of it. And that, trying to establish the fact that this is a really serious, this is a job description, and it has certain parameters of how you can do it well. You can learn these, but you can, we want to benchmark sort of who's doing it well, all of this stuff. I think it's about making corporate venturing be better understood, better respected, and just people can know what good looks like.
Well, we've certainly learned a lot over the years from GCV, and you may know is a big part of our strategy. We're looking at interacting with corporate M&A teams and corporate venture groups each week to learn a little bit more about kind of where they're investing, so that we can elevate our own investing IQ as we make seed stage investments. What's been amazing is just sort of seeing these corporates who were participating in a passive way in the Series C and Series D rounds sort of move up and start to participate not only in the seed and Series A and B rounds, but also in some cases lead rounds. You may know the data. I was going to ask, what do you know the latest numbers on the percentage of corporate venture as part of the overall venture-backed companies? I think it was 1 in 10, maybe 5 years ago. Now it feels like maybe 4 out of 10, 5 out of 10 rounds of financing that are happening in the venture-backed world effectively are coming from corporates. And the deals that we're in, we're being incredibly inclusive of these corporates. So it's more like 8 out of 10 for us. But what's your view on, do you have any high-level data on how active these corporates are participating?
No, I'm not sure if I have the absolutely latest on what percentage they are of corporate deals, but it's definitely gone up from that, 1 in 10. I mean, it's probably tracking somewhere, and it does jump around a little bit, but 15, 20, even up to, I've seen up to 25% of deals can be, have a corporate backer. Definitely a trend for, leading more deals, and corporates being much more kind of vocal about wanting to do things like sit on boards. So that's a topic that comes up a lot at GCV meetings, is, how to be a good board member. If you are corporate on a board, because there are some sensitivities about the fact that, you don't want to be too, if there's some commercial overlap there, you need to be a little bit sensitive on how you might handle that relationship. But absolutely, you can make a big impact. So we're seeing that. And it's not surprising, because, I mean, just to throw another number at you, if you, again, sort of 10 or 12 years ago, I think when Jim started, looking for corporate, venture units, there were sort of, he had probably sort of two or 300. Now we're tracking 6,000, of which 2,000 are sort of what we classify as active in the sense that they have probably done a deal in the last 12 months. And some of them are obviously a lot more active than that. They're doing more than just one deal a year. But I'd say that, that's, so it's just a big slice. And so yeah, so I think we are in the process of running our annual survey. And so we should be getting some data at the beginning of next year that will then kind of shed some light on what the latest is, but I wouldn't be surprised if it kept going up.
Yeah, the 2,000 that are out there, the ones that we've interacted with, Intel and SK Hynix and Yamaha, Kubota, Zoom, Micron, a number of others, most of them are kind of looking for a blend of both financial returns and strategic value. Of course, there's been some spinouts that seem to be exclusively focused on financial returns and are rebranding themselves, Microsoft's M12 or SAP's Sapphire.
Yeah.
What are you seeing with regard to sort of CVC mandates as it relates to sort of strategic versus financial returns? And what do you think about this sort of rebranding strategy of some, corporate venture groups trying to almost distance or separate themselves from the headquartered, a corporate entity?
Yeah, there seems to be a really interesting sort of life cycle of, of the corporate venture unit, right? Which goes something along the line of you start doing some ad hoc investments, here and there, and then these go well enough so that somebody goes, hey, maybe we should have a dedicated fund. And at this point, you get a dedicated fund, so there's a little bit more freedom to, to make your own investment decisions anyway. And then if you're really, really good at it, and you're starting to make good financial returns at this point, usually the people who are leading the CVC fund start getting slightly itchy feet, because often, and not, some companies actually structure their programs extremely well so that the compensation for those professionals is on par with what you would get in, VC. So you have some sort of carry, maybe it's a synthetic sort of shadow carry, but you have something like that. But some of them don't. And then, so at this point, they're really good, they're investing in really top-notch companies, they're making great returns, and they start thinking, if I was at a VC, I would be getting all this profit share, and then that's usually when they want to spin out. And so and we've seen that, multiple times. And then it's kind of interesting to see whether when they spin out, can they still maintain that relationship with the corporate, right? Because from the corporate point of view, so it's great that your CVC unit did so well that they now want to be independent, but is them spinning out necessarily a good thing for you, right? Because most corporates, the returns that any CVC unit could make are never going to rival, your annual profits of a huge multi-billion-dollar corporation. So the strategic imperative is much more prominent for them. And so if your very successful CVC unit then spins out, you need to really have a big conversation about how do you kind of keep that relationship going. I think some of them do it quite successfully, so that you still get some benefits. So the CVC unit gets their freedom, and but the parent corporation, which still continues to be a big LP in it, sometimes a sole LP, does get some strategic benefits back. I went to a Sapphire, which is SAP's old corporate venture unit. I mean, they're a really good example because they really rebranded. They were very keen on not being known as SAP's corporate venturing arm in any way, shape, or form. But I went to a recent conference that they had for kind of portfolio companies and introducing them back to SAP. So behind the scenes, that's definitely very much still going on. And so it's a kind of art, not a science. Like everybody solves that problem in a slightly different way, I think.
I've seen the same pattern that you've seen. They sort of start off by attending a GCV event. Then they invest in a couple of companies. Then they realize, hey, wait a minute, we've got some traction. They get a dedicated pool of capital. And then they realize at some point, maybe we should spin out like Sapphire and others. And then somewhere down the line, the other trend that I'm starting to see now is they want to see more industry relevant deal flow. And so they actually look at becoming an LP in funds. And so Sapphire is an LP in a number of funds. SK Hynix, as an example, is an LP in our fund. Have you seen that trend? Are corporates starting to lean in a little bit more in an effort to get access to industry relevant deal flow and investment returns, actually making, you know, kind of smaller investments into other firms that may be feeder organizations for them?
Yeah, I mean, there's definitely a lot of that going on. I don't know if it's a new trend, because I feel like they've always done that to some extent. Like that was almost, you know, in the days before. So that was almost the pre even starting to make your own investment step sometimes, was just to become an LP in a fund, so that you could take that first learning step of, you know, when you know, again, so if we're going back sort of 10-15 years, when corporates really didn't have any kind of investment muscle themselves, they just wanted to know how Silicon Valley works, so that's what they did. But it's interesting, they haven't, you know, even now when they have their own dedicated units, I think they still do that. You know, they still want to, because it just seems to be all about, I mean, it's always, whenever you go to a GCV event and you standing around having coffee and stuff, the conversation is always deal flow, deal flow, deal flow, right? Like everybody just wants to hear about what are the latest deals, what are they missing out on, right? So it doesn't surprise me at all that you would want to have, if you have the money to have, you know, ears everywhere, right? And your LP investment essentially is just an opportunity to tap into something, you know. And some funds, I'm told, are better than others at sort of sharing back some of that you know, intelligence. And there's, you know, there's some that handle that relationship really, really well. And yeah, maybe not everybody does.
And now that we have somewhere between 2,000 and 6,000 corporates that are making investments here and there, with 2,000 that are being active, do you envision them being a consistent part of the venture ecosystem going forward? You know, years ago, when so much of the decisions and activity were being driven by the CFOs, it was an asset allocation decision. Hey, you know, there's a lot of people making money in venture. Why don't we allocate a little bit? And then when venture returns weren't there, you'd see this sort of the corporate sort of retreat to some degree and be called sort of tourists, right? In the industry. I have a view that now, because the business units are so much more engaged and the CTOs are so much more engaged, that, you know, corporates are viewing this as accessing innovation outside their four walls and really trying to be a consistent part of the venture ecosystem. What's your view on sort of corporates coming in and out of the asset class?
Yeah, I mean, I think you're asking exactly the most interesting question that is sort of occupying us at the moment, which is, how will corporates behave now in this coming downturn, right? So we've seen a huge pullback in market investment activity across the board. And we've been watching really closely to see whether, you know, are corporates going to come out of, you know, funding deals faster? You know, are they going to stop following on with their investments and so on? So watching all of that really closely. I have to say, at the moment, I'm feeling really positive about the fact that, you know, yes, corporate activity in terms of funding startups has fallen, but it's fallen really in lockstep with the rest of the VC world. So no faster. So they're not kind of getting scared off any more so than any other investor. And there's a lot of talk the whole time that, you know, that hopefully this time it will be different, because, you know, you do have people in the industry who've been doing this a long time. It's very professional. There's a sort of understanding, certainly amongst the sort of older CVC units, that you've got to stay the course. It's really important to be a good investor. A lot of talk about the fact that actually now is a really good time for CVCs, because if you see some of the, you know, the frenzy come out of the market, you can get into deals at slightly better terms, etc., right? And as long as you still have that corporate commitment behind you, you've got some money to invest, and you can really kind of come in and make some very astute deals now, which will then pay off in, you know, 5 years' time, when we're hopefully again on very much an upward economic curve. So there's a lot of talk about that. The one caveat I would put in there is, you know, we'll have to wait and see, because what also happens, and you've probably seen this yourself many times, is you can have the best, you know, CVC unit in the world. It's getting stellar results, change of CEO, and it gets shut down. It doesn't matter that it was performing in the top quartile, right? It doesn't, it's just that company now needs to save some money, and they've got a new person at the top who is just not that invested in that unit. And so they, if that happens too many, to too many units, if companies have to sort of find some cost savings, then then you will see sort of, I guess, those corporate units then not being able to support their portfolio companies, and that bad reputation will creep back, and which would be really unfortunate. But I don't think you can rule it out, because it's not really in their power, sort of whether they stay alive or not sometimes.
When you mentioned deal flow, the one other question that I was going to ask was, I saw corporates over the years, AT&T had a foundry for a little while. There's groups that started their own incubator and accelerator programs. Are there any new trends that you see sort of coming out of the corporate world that you think are interesting to catalyze deal flow or to help syndicate rounds of financing for their existing portfolio companies?
Yeah, so I mean, so definitely the big trend that we're seeing now popping up everywhere is this sort of build your own startup internally trend. So, whether you want to call it venture building or, internal startup studio or whatever. It's funny because it's not really a new trend. These things always come around in cycles, right? So, 60s and 70s, you had so many, innovation labs and companies, Bell Labs and so on. We're doing this all the time. And then that kind of, a lot of those got kind of dialed down, and now it's back again. And it's really fascinating to watch, because it's hard to do. It's really hard to take to grow a startup inside a big corporation that just doesn't have that startup mentality. So you have to carve out this kind of safe space where you can nurture and incubate this startup style thing. You have to bring in, maybe you can have some of your corporate people, but you really have to bring in kind of quite an influx of people who are very startup-y, happy with risk and uncertainty and all the rest of it, and making that work and being able to create something that then can go on, become a viable company and spin out and so on. I mean, it's a really long project. So there are examples of corporates that have been able to do that, but yeah, the jury's kind of still out on whether that works better or has more of a success rate than maybe just doing kind of minority stake investments in pre-existing startups. So we'll see.
That whole corporate venture studio model is really interesting to me. I remember AT&T was talking about taking internal employees and having them partner with external startup, with an external startup, and sort of sponsoring the growth, and that was an accelerator effectively to creating taking innovation and turning it into enterprise. And I always thought that was kind of an interesting model. So yeah, it'll be interesting to see how that plays out. Last, we're in the rapid fire Q&A portion of the program, just as we wrap up here, Maija. So I was just curious, sort of, is there anything that you do in particular to prepare yourself to sort of for professional excellence and bringing your A game to work each day? I always, when I meet successful executives, I love to sort of identify patterns and best practices on sort of not only living life, but sort of excelling in your career. Is there anything in particular that you find has been helpful in advancing your professional career?
Well, I don't know if it's a kind of methodology or anything, but I mean, I guess, the one thing that helps a journalist the most is just never being able to, never being afraid to ask questions and ask stupid questions. And some of the best stories that I've ever done as a journalist have been when I've been kind of able to kind of admit that I didn't quite get something, and asking people to explain, or to notice that something is just a bit off. So yeah, I think that kind of eternal willingness to ask questions, and even if that makes you sound like you're a bit dumb, but it gets you interesting. It gets you interesting answers.
What is it about reporters that put them in a position to play valuable roles in the venture ecosystem, whether it's Mary Meeker or Michael Moritz? I mean, some of these people that have come from the journalism industry, asking smart questions, staying curious, sort of the ability to almost forecast the future seems to be highly relevant when we're talking about venture investing and innovation. Is there anything that you sort of take away as a pattern in sort of looking at how journalists engage with sort of an ecosystem of innovators like the corporate venture group or venture capital firms like ours?
Yeah, so I was thinking about this. No, and it's interesting because so my old editor at Sifted actually went and joined a venture capital group. He joined First Minute Capital, and so there is some kind of precedent for that as a kind of career path. My theory is that it comes down to, I mean, journalists are really big networkers, right? So that's kind of the big tool of our trade, is knowing lots of people, knowing who to go to ask certain things. And I think that's a skill that really translates across, if you're wanting to, have your ear close to the ground to invest in the best companies, right? So you need big networks. And also, I think the other thing is, we're some of us anyway, we're very charming because we have to ask people to kind of give us information that they might not necessarily want to give us. So we're kind of, good at persuading people to do stuff. That's also part of the job. So maybe those two skills help: networking and a certain amount of persuasion.
Well, you're charming, and I've appreciated that you allocating a little bit of time to support, our efforts to gain market insight on sort of what's happening in the corporate venture world, and then share it with others. Thanks so much for allocating a little bit of time today.
Oh, well, thanks so much. It was a fun conversation.